Philippines' GDP growth momentum cools in Q2 as inflation soars. Manila. The Philippine financial system's healing momentum slowed inside the second sector amid high inflation. However, the government is confident this year's boom target remains practicable, giving the crucial financial institution leeway to further tighten policy to scale back price pressures. The Southeast Asian U.S. gross home product turned into 7.4% higher within the June sector than a 12 months in advance, developing greater slowly than the downwardly revised 8.2% annual fee visible within the preceding sector and the median 8.6% forecast in a ballot. It changed into the slowest increase since the one-third region of 2021. However, the second fastest up to now in Asia for the second one area of 2022, Economic Planning Secretary Arsenio Balisican said on Tuesday. Our economy is doing exceedingly properly, he advised a media briefing, saying the second quarter performance turned into still in line with this year's goal for increase in full-year GDP of 6.5% to 7.5%. We can nonetheless manage further critical financial institution rate hikes. Balisican attributed the second quarter slowdown to weak agricultural manufacturing amid high input fees and to easing increase in production, which he mentioned may be partially due to inflationary pressures. Second quarter growth is considered first-rate, said Michael Ricafort, economist at Rizal Commercial Banking Corp in Manila. It were driven by using measures to further reopen the financial system towards post-pandemic normalcy, he stated. On a seasonally adjusted basis, however, the economy got a smaller 0.1% in April-June from 3 months earlier, when quarterly increase were 1.5%, the authorities said. Economists expect the Bangko Sentral ng Pilipinas (BSP) to remain in policy tightening mode to tame inflation, that's broadly projected to exceed the vital financial institution's goal for a 2% to 4% rise in year average costs. The BSP has flagged the possibility of elevating key hobby costs in addition with the aid of 50 basis factors at its August 18 policy meeting, confident the economic system can withstand a much less accommodative policy. It has raised hobby rates by means of a complete 125 basis points for the reason that the beginning of the 12 months to tame inflation, which soared to its fastest pace in nearly 4 years in July. Accelerating inflation is probably to hit consumption. An increase in full-year GDP should settle at the low end of the authorities' target, stated Nicholas Mapa, senior economist at ING. Mapa expects a 50 bits per second charge increase through the BSP this month, observed with the aid of 25 bits per second hikes at every of the 4 following monthly meetings. The administration of President Ferdinand Marcos, whose 6-year term commenced on June 30, is in addition targeting growth in full-year GDP of 6.5% 8.0% annually from 2023 to 2028.